I'm Jessica Matthews. I'm president of the Carnegie Endowment for International Peace. I am so pleased to be here in Brussels tonight to welcome all of you to what is going to be a fascinating discussion, exploration of China's changing role in the world, and also to celebrate Carnegie's expanding presence here in Europe. The Carnegie Endowment is the world's oldest foreign policy think tank, celebrating our centennial this year. And as it has throughout its history, Carnegie has adapted and changed dramatically with the times. We were here in Europe between the world wars with an office in Paris. That closed in that time, and then after the UN was founded, we opened an office in Geneva. And much more recently, 3 years ago, we came back. We recognized, I think, presciently that in order to tackle the issues that are facing an increasingly globalized world, we needed to have a permanent international outlook, a permanent international presence at the core of our operations. We needed a permanent presence on the ground in critical countries and regions of the world, staffed by experts from that region. And so half a dozen years ago, we redefined our mission and set ourselves the goal of trying to become the world's first truly global think tank. So today, in addition to our operations in Washington, we have thriving centers in Moscow, in Beijing, in Beirut, and here in Brussels. We've established a world-class team of scholars on 3 continents. And to reach an ever wider audience, we are publishing in English, Russian, Arabic, Chinese, and increasingly in French. Our centers frame the issues the way they are seen and understood in the region in which they sit. For the past 3 years, since coming back to Europe, Carnegie Europe has focused on delivering fresh regional and global perspectives on the foreign policy challenges that matter most to Europe and to the U.S., re-engaging with Russia, political reform in the Middle East, global security, nuclear proliferation, the search for stability in South Asia, and that's to name just a few. A dynamic policy hub. This is a place where we bring the work and insight of our scholars from around the world to engage with the European foreign policy community and to engage the experts in this community with the work that we are doing elsewhere. The opening of this new office will allow us to expand on several fronts. We now have a rich team of experts in Europe and a growing number of visiting scholars based here in Brussels. 2 of them are with us tonight. Sinan Ulgen is a former Turkish diplomat. Where are you, Sinan? There. And a widely read commentator who'll be working on Turkey, its economic rise, its politics, its evolving relations with the international community, and on issues of, in his spare time, of nuclear proliferation and climate change. Paul Schulte, who's somewhere here, saw him a minute ago, is a former senior official with the British Foreign Service who has served as Director of Arms Control for 2 British defense secretaries. He'll be working on issues relating to nuclear defense, security policy, and cyber warfare, thinking through norms and rules and applications of deterrence theory and lessons from arms control to this 5th new realm of potential warfare. Pierre Goldschmidt from Belgium and Mark Hibbs, an American based in Germany, are part of this team, part of our world-class leadership on nuclear proliferation issues. So as we grow, we have a Turk, a Belgian, a Brit, a Frenchman in our leader here, Fabrice Pratier. And so you can see that we mean what we say when we talk about centers that try to reflect the regions in which they are operating. We will be here partnering with the Open Society Institute to assemble a group of rising young foreign policy stars, those who will most likely shape Europe's foreign policy in the coming decades, to meet and debate on strategic issues, an initiative that we're quite excited about. And these are just a few of what we plan in the coming months. I can think of no better way to illustrate the power and the richness of the vision of a global think tank than the terrific panel that we've assembled here tonight to talk about China and its emerging role in world geopolitics and in the global economy. This is one of the handful of issues that we can pretty well count on to be determinative of the shape of international relations in the century ahead. And I truly don't think you could find three more brilliant or more informed minds on this subject anywhere. So I don't trespass on your patience any longer. Let me simply say that it is a great pleasure to turn the floor over to our distinguished moderator, and Philip Stevens, Associate Editor and Chief Political Commentator of the Financial Times, who has agreed very graciously to be our chair tonight. And let me thank him for being with us and all of you for joining with us. At the end of the hour and a half, we have a lovely cocktail. I hope you will stay and enjoy it with us. And Philip, over to you.
Thank you very much, Jessica. I think I'll stay seated here. I want to thank Jessica and Carnegie for inviting me to moderate, also for keeping faith with Europe when one or two people in Washington are said to have perhaps lost faith. So I think it's a great statement that Carnegie is expanding its operations here. As I came in, I saw one of your excellent publications, which was talking about how the visible hand is helping in Chinese development. My role here is as the invisible hand. My role is to sort of choreograph a little, but basically not interfere too much with market forces. We have a very distinguished panel, and then try and get, or I don't think I'll have to try, just to sort of moderate the discussion a little. I did want to, perhaps just to sort of blow the trumpet of the FT, to refer to an excellent piece in the FT recently, which was written by one of my colleagues. And just to quote, he was talking about what he called a protectionist-inclined creditor country, reluctant to shoulder international responsibility commensurate with its economic strengths, and the damage that that country did to the world, economically and geopolitically, as it ran up a big trade surplus, then exported deficient demand to the rest of the world. Now, of course, he wasn't talking about China. He was talking about the United States in the 20s and 30s. And it seemed to me that that's the big question that many of us have, is, watching from afar the rise of this great nation, the re-emergence of this great nation, are we also going to see some of the errors of history repeated? As I said, we've got as distinguished a panel as you could hope for. I'm going to introduce them one by one. They're going to speak for 6 or 7 minutes. I think I've been told after 8 minutes I have to sort of bang a gavel, but except I don't have one. And then we're going to have, I think, what I'm sure will be a free-flowing conversation. Michael Pettis, who's going to speak first, is, I think, what you'd call a practitioner of global financial markets turned scholar. He teaches at Beijing University, and I think, and I hope, he's going to explain to us where China stands now after, if you like, the worst of the global financial crisis, and what problems are left for China as it looks forward. Anyway, Michael.
Thanks very much. Let me get back here. I'm glad you brought up the comparison with the United States in the 1920s, because there's an awful lot of similarity in many, many ways between China today and the United States in the 1920s right up until 31. And unfortunately, it seems to me that the series of missteps the United States took is being followed almost perfectly in the case of China. and maybe we can get into that a little bit later. But what I want to talk about is the impact of the crisis on China. In 2007, 2008, when the crisis occurred, one of the consequences, as we all know, was a very rapid decline in international trade. And as a country very heavily reliant on its export surplus to absorb the excess capacity, the huge amount of excess capacity that it creates, the contraction in international trade, along with the contraction in China's trade surplus, was devastating for the economy. How much so? We don't really know because the numbers are not great, but people who are much smarter about this than I am assure me, and there seems to be a consensus, that by the last quarter of 2008 and the first quarter of 2009, growth in China may have been zero or even slightly negative. And this is a country in which less than a year earlier, on a quarterly basis, growth was well in the double digits, 10, 11, 12, 13%. A year later, it was back again at 12, 13%. This gives you an idea of the incredible volatility of the Chinese economy and its incredible susceptibility to trade. Every once in a while, an article comes out and says China's actually not that susceptible to trade. Nonsense. It's extremely susceptible to changes in trade. So the leadership in China, policymakers in China, were faced with two problems when the crisis ensued. One was an old problem, and that is the rebalancing of the Chinese economy. And I'll get into what that means in a minute. But then there was the new problem, and the new problem was a collapse in growth and the potential for a very, very rapid rise in unemployment. Now, unfortunately, the policy responses to those two different sets of problems were exactly the opposite. And I will explain why I believe that shortly. But policymakers in Beijing, perhaps correctly, addressed the first problem as the urgent one. That is the very rapid slowdown in growth and the potential sharp rise in unemployment. And they addressed it with a massive expansion of investment. So in 2009, officially bank credit, expanded by 31% of GDP. And I stress officially because there's a lot of evidence that banks were moving a lot of their loans off balance sheet. So it was probably greater than that. But 31% is a huge number. And not surprisingly, China generated a huge amount of growth. This year, people talk about a much more moderate or a much more prudent expansion, monetary expansion or credit expansion. But prudent is simply, it doesn't apply in this case. The credit expansion last year was about 9.6 trillion renminbi, and this year it's going to be 7.5 trillion. Officially, that's the quota, although I suspect it'll be greater than that. So people are saying 7.5 trillion. That's very prudent compared to 9.6 trillion. But in the 3 years before 2009, credit was expanding by around 3 to 4 trillion a year. So this new small number is actually double the normal number. We are in the midst of a massive expansion in investment, and that expansion in investment is necessary to generate growth. So I said there were two problems that they were facing. The other problem was the rebalancing of the economy, and this has been a problem for a long time. Rebalancing in the context of China has a very specific meaning. It means getting the household consumption share of GDP to rise. The numbers that we have in China are truly, like many numbers coming out of China, astonishing. 10 years ago, consumption was around 45% of GDP, which is a very low number. It's not unprecedented, but it's quite low. The low-consuming, high-savings country of East Asia typically consume around 50 to 53% of GDP. 45 was low. 5 years ago, China was consuming around 40% of GDP, a number that I believe is unprecedented. That created a great deal of concern because, remember, you have three engines of growth. You've got domestic consumption, you have investment, and you have the trade surplus. If it's a surplus, it's an engine of growth. And if consumption is too low as a driver of growth, then you must rely very heavily on increases in investment and on a trade surplus to generate growth. And it was recognized 5 years ago that China was overly dependent on investment, and there was already quite strong evidence that we had passed the stage at which investment in the aggregate was economically viable. It was starting to become misallocated investment. That's a hotly debated topic, but there was widespread belief among certain quarters that investment was too high and being misallocated. China entered the crisis, by the way, with the highest investment rate ever recorded. And it also meant that China was heavily dependent on external trade. And it was recognized that a large economy like China could not be so dependent on external trade. And the crisis showed why. With a contraction in trade, China was hurt very, very badly. So the trick is to raise consumption as a share of GDP. And that's where the big debate has been. And one of the things that I find when I leave China and speak is that people are always surprised to hear me say that there is a ferocious internal debate within China, and sometimes a very ugly debate about the necessary policies that are needed to generate a rebalancing of the economy. Premier Wen, for example, is clearly almost panicked about the inability to raise consumption as a share of GDP. And there's a big debate as to why consumption is so low. You will often hear references made to this insane desire to save on the part of Chinese households, perhaps for cultural reasons, perhaps because of a lack of a social safety net. Two things. First of all, I'm not sure those reasons make any sense. There's a different set of reasons that are more powerful in explaining. And secondly, the Chinese don't have an insane desire to save. The share of savings out of household income in China is high, but not outrageous. I believe Indians save more out of household income than the Chinese do. There are other reasons why China saves so much. In order to understand why, it's useful to think about an accounting identity. Everything that you produce is either consumed or saved by definition. So if production grows faster than consumption, then necessarily the savings rate must rise. And so when we say that the Chinese savings rate over the past decade has risen from quite high to an unprecedentedly high number, to an astonishingly high number, what we're saying is that during the past decade, production grew much faster than consumption in China. It's an accounting identity. So why did that happen? I would argue that the reason that happened is because of the very development model that China has followed, which is, you can describe it as the Japanese development model, perhaps on steroids, a super version of the Japanese development model. A very successful model for generating growth in the early stages, but it always runs into constraints. What are the characteristics of that model? Basically, you take household income and you use that to generate additional productive capacity. This is not a model invented by Japan. It's an old model. In the 1960s and 1970s, for example, Brazil, during its period of economic miracle, when it was growing by more than 10% a year, Min Pei wrote a very interesting article about this, generated the same kind of growth. And they did so because of very high taxes on income, which were then used to subsidize a massive expansion in investment. The Chinese model is not that different, or the Japanese model is not that different. It just uses a different way of transferring wealth from the household sector to generate rapid growth. Rather than do so through explicit taxes, it does so through a series of implicit taxes. There are a number of ways this happens, but there are three very important ways. First of all, as is much discussed, is an undervalued currency. The undervalued currency is simply a form of transfer. If the currency is undervalued, the cost of imports, of course, is higher than they should be, and that reduces the real value of household income. Who benefits from that? It's the export sector. So when you think about an undervalued currency or an overvalued currency, you simply think of transfers from the household sector to the export sector or vice versa. In the case of China, with its undervalued currency, income is transferred from the household sector and the export sector is subsidized, heavily subsidized. If the currency were to raise to anywhere near an equilibrium level, we have been warned many times by the export sector, most companies would go bankrupt. Most exporters would go bankrupt. The second very important form of transfer is the wage productivity differential. In the 1980s and 1990s, productivity and wages in China grew at more or less the same pace. Productivity grew a little bit faster. In the past decade, the divergence between the two extended. So wages grew much more slowly than productivity. Why does that matter? Because that's also a form of transfer. You can think of it as if it were a tax on income, which is paid for by workers, and the benefit of the tax goes to employers. So when wages grow more slowly than productivity, once again you are transferring wealth from the household sector or from workers to the employing sector. The third of these mechanisms is the one that's least discussed, but it is probably the most important of the mechanisms, and that is financial repression. In China, like in all the other countries that followed the so-called Japanese development model, the system is heavily banked. The vast majority of savings are in the form of bank deposits, and the vast majority of corporate financing is in the form of bank loans. More than 90% of all capital raised, substantially more than 90% of all capital raised by companies is in the form of bank loans rather than bond issues or equity issues. The deposit rate and the lending rate is set by the central bank, and it's set at way below any argument as to what the correct rate ought to be. Perhaps a minimum of 400 basis points, a maximum of 800 basis points below an equilibrium interest rate. Why does that matter? It matters because that means that net savers, which is the household sector, are subsidizing net users of capital. And there's very little consumer financing in China, so net users, for the most part, are the state-owned enterprises, local and provincial and central governments, real estate developers, infrastructure investors, etc. Am I running really late? Okay, I'm only halfway there. It's very hard to talk about China. And
I mean, a lot of this we can come back to.
Okay, then let me conclude very quickly. We'll try to do it quickly in saying that the problem then China has is it's got to raise consumption. And to do that, it's got to raise household income. And to do that, it's got to raise the value of the currency, raise interest rates, and raise wages quite dramatically. But it cannot do so quickly. If it does so quickly, the entire capital-intensive sector goes bankrupt, exporters go bankrupt, and employers go bankrupt. So China needs probably 8 to 10 difficult years of adjusting those mechanisms. The real question, and that's something that we can talk about later, is whether China has 8 to 10 years to do that. Because the pace of China's adjustment, thanks to its dependence on its trade surplus, is going to be determined by the pace of the external adjustment, the pace at which deficits in the rest of the world adjust. So I will leave it there. Thank you very much.
Thank you, Michael, for that very eloquent exposition of the tensions in the Chinese growth model. Quite a lot of people, I think, tend to just look at the raw numbers, China, marvel at the speed of growth, and forget that history doesn't usually travel in straight lines. And I think you've left us with a lot of things to talk about in the discussion. We're going to move on. We're going to move on to Yukon Wang, who in a lengthy and distinguished career has combined scholarship with public policy making at the World Bank and the US Treasury, among other places. He's written for the FT, I think, from time to time. I think most recently on the role that Europe might play in guiding China into a more multilateral approach to economic development. But I think as our sort of conversation here broadens out a little, he may turn to that subject tonight. But anyway.
Let me just begin by noting the obvious. China is now the second largest economy globally. It's Europe's largest trading partner. But China's rise is causing both political and economic friction. The political friction arises from the fact that China's values on democracy and human rights differ from that in the West. The economic friction arises because China's global power is rattling commodity markets, financial markets. China's rise is also changing the global governance structure, and this is causing a lot of concern. And in various fora, you'll see that China's views straddle the interests of many countries, but China's views are not aligned with any country. And that's because China is actually quite unique. China has more poor people than all of Africa. It has the middle class larger than any European country. It's the only developing country that produces at both ends of the technology spectrum, the low end and the high end. The West sees China as a global economic power, but China sees its per capita income as only 1/10 that of the richer European countries. The former vision, the poverty vision, drives China's policies. The wealth vision is how the West sees China, and this causes dramatic differences. Now, I'd like to highlight 4 areas in which EU-China's interests intersect and create problems. And the question is, how will EU react to these issues in the future? And the first refers to the growth agenda. China is bothered by the fact that international fragility of the system has deteriorated, and this will affect growth. And where does the friction come in? The friction comes in because China is a lower middle income country, and it sees itself as worrying about the so-called middle income trap. The middle income trap was a word coined to reflect what was happening in Latin America. That is, over 10 or 15 years, no Latin American country moved from middle to high income. As a matter of fact, the only country, middle income country, that's been able to move from middle income to high income is Korea. And the issue for China is, how do you move to high income? And they see that as creating a knowledge, technology-intensive economy. And this creates tremendous frictions because European companies want to have a greater presence, and the greater presence is based on technology, and China would prefer homegrown technology. So that's friction number 1. The second friction refers to what I call the sustainability of the development process. And let me focus here on the environmental agenda. China is the world's largest polluter in terms of hydrocarbons. Half its waterways are unfit for drinking. It is extreme desertification. It has all the climate change problems in spades. But China's use of pricing incentives is very poor. Its regulatory framework for governing environmental issues doesn't work. It sees global standards of environment as being appropriate for developed countries, but not developing, and this puts China in conflict with the West. On the third point, trade imbalances, and Michael's already talked about this. China's growing trade imbalances creates extreme friction with the United States, and it will also with Europe. But the almost exclusive focus on the exchange rate as a solution is misguided, and this will create further friction. On the last point, China's rise in an economic sense is also making the political and security apparatus more confident. And this is creating friction on what I would call the global interests. And China feels that it can actually be more aggressive on its core interests than it has been before. And this is creating tensions in the political and security arena. Now, China's rise is creating what I would call a tripolar world: North America, Europe, and Asia, including China. And the question is, how does this tripolar world, how will it deal with these sources of friction? And let me just comment on where I would call the areas of shared interest. Because if Europe wants to engage China productively, it has to begin by finding where have I shared interests before I get into the areas of where I have conflict. Now, on the growth agenda, if you walk into any store in Beijing, any mall, what you'll see is everything in there is imported. And first thing you also notice is everything in there is European. All the high-end imported goods in China comes from Europe. Europe has found a niche. So Europe has a natural niche by hitting a product line where China cannot compete. And where can Europe also go? It can take another lesson from the United States, which has realized that China is a profit center. Profit center for selling within China rather than worrying about the trade imbalance. And that is, I think, areas of shared interest. On the environmental agenda, China has started banning small companies from polluting. It spent $38 billion last year on renewable energy investments. The market for collaboration between the EU and China on technology is great. The lessons of Europe in terms of pricing, regulations, enforcement, urbanization, management of transport systems, all of which can have a dramatic impact on climate change in China, you have experiences which far exceed the US. On the trade issues, as Michael pointed out, exchange rate is an issue, but by itself it can't solve the problem. Consumption, investment, savings. This will create the global balances. And how do you impact upon this? You focus on urbanization. You focus on the service sector delivery. And again, these are areas where Europe can contribute directly in terms of addressing trade imbalances. And then let me finish by talking about the global political agenda. Where are the shared interests? And let me point out and use very simplistic terms. Europe should not see China as a strategic partner on these core, what I call core interests. There are just too many differences in here. So the right concept is what I would call responsible stakeholder. If Europe focuses on the issue in terms of just working with China, that they have a stake in these conflicts and differences, and it's a major power, this is a concept that can resonate in China and forms a basis. So if Europe focuses on what I would call shared interests as a basis for engaging China, it can have a major role. And this major role is actually a lot easier than what I would call the US-China role. The US-China relationship is tremendously disadvantaged by the bundling of security interests with other interests, and that disadvantage is one which Europe does not have. So if Europe plays its cards correctly, it can have a role in terms of what I would call the tripolar world, the rise of Asia, the China that rivals the United States. Thank you.
Thank you, Yukon, for that excellent exposition. And for this audience, I think rather upbeat. Here's an opportunity for Europe to grab at rather than something to fret about. Whether we indeed grab that opportunity, because at the moment it seems to me Europe has more a sort of posture towards China than a strategy, but whether we grab at it. But I'm sure that's another subject for our conversation afterwards. Now, Min-Chin Pei has been talking, lecturing, writing about most of these subjects since long before most of the people in this room, I would guess, even thought they were going to be important subjects. He's a great scholar as well as a fellow at the Carnegie Institute. He teaches or researches at Claremont McKenna College as well as at Carnegie, and I don't think he needs any more introduction. Thank you.
Thanks. I think the title of this evening's event is the post-crisis and the economic order and China's role in it. It's interesting that there's such a divergence in perception about China and the reality inside China. The world sees China in one way, and Chinese themselves see China in a very different way. And that's quite obvious when you read internal Chinese media, because what the West says about China does not get repeated in internal Chinese media. So why is there such a divergence? Because while the West sees China growing strong, more influential, perhaps having a much more consistent strategy about its future, the domestic media in China portrays a China that is much more skeptical, much more uncertain about its own future, its role. So today my task is to try to crack this puzzle. And the phrase you're going to hear more with increasing frequency regarding China is so-called inflection point. That is, you will hear China an inflection point. Maybe you've already been hearing that kind of talk for some time, but I think with rising frequency, you're going to see China and that phrase mentioned together. And that's because of two big challenges China faces in the years ahead. One is in the realm of ideas. We've talked about interests, but ideas do matter. And the other is, especially ideas about how to move forward inside China. And the other is China's relationship with the rest of the world. Because China is now a much more consequential player in the world. And regarding the first one, the ideas, let's just go back a little bit and think about why ideas actually matter regarding a country's self-confidence and its role in the world. Japan in the 1980s was already a great economic power, but Japan was not a country that had great ideas in the 1980s. It was a country that could produce world-class consumer products, the way China can produce world-class consumer products today. But Japan did not have an idea about the future. And I'm afraid that this is where China is today. If you look at China's 30 years experience in reform and opening to the outside world, for the first 20 years, China's progress was driven by two very powerful ideas that both received enormous popular support at home and were endorsed by the international community. That is, reforming a socialist economy and opening to the outside world. But in the last 10 years, while the Chinese economy was growing very fast, the idea machine in China was stagnant. You do not have another idea that would tell both the Chinese themselves and the rest of the world that what China is all about. Today you ask yourself, what is China all about? Is China about cheap consumer goods? We can easily source cheap consumer goods from another country. And I think that's a debate the Chinese themselves are not having today, because internally they do not know, frankly, in what direction they want to move. Move toward a capitalist democracy? Obviously not. Move from a more egalitarian, more equal, more socially just society? That was the official rhetoric for the last 10 years, but the action on the ground is very limited. And when you look at the role that China is going to have in the world, in its capacity as a great power, if you measure China in terms of the military capabilities, economic influence, so on and so forth, China is one of the top great powers in the world. But if you look at its role, again, here you see discrepancy. Discrepancy on several fronts. Most importantly is that the discrepancy between how the world expects China to behave in the international arena and how the Chinese think they ought to behave. And this gap is at the source of the various frictions between China and the rest of the world, especially the West. Why is there such a discrepancy? I see this coming from the following areas. One is clearly China's diplomatic tradition. China is a consummate player in the realm of realpolitik. China's foreign policy has one driving principle, that is realism. Realpolitik, Chinese leaders see the world in most of the time from a zero-sum competitive point of view. And that tradition conflicts very, very powerfully with the Western liberal internationalist mindset. And you can see this on the issues the West expects China to behave in a very different way in the direction of, say, responsible stakeholder, climate change, global imbalances, regional security, and so forth. The other source of conflict lies really in the nature of the Chinese system. Yukong mentioned that, and I want to underscore that point. Because of the one-party state of the Chinese current system, China's interests overlap with those of the West, but the Chinese ruling elites continue to view the Western political values and order as a threat to its political future. And that perception inevitably influences how policy in various areas is made in China. And then the third problem is, again, something that only China has. That is, China is the first global power that also happens to be a third world country. Yuko mentioned that. Because it creates all kinds of domestic political problems. How do you justify a more activist, liberal, international role with the reality of poverty, social problems, all kinds of structural economic problems at home. And as long as that situation continues, you will see China's role in the international community severely constricted. But the problem does not originate from China alone. I think the other side of the coin is that the West, the rest of the world, has profound reservations about China's role. The West, at the same time, wants China to be more active, but also wants China to be less active. It wants China to pay more for global public goods, but does not want China to behave like a traditional great power. And here you can see all kinds of evidences. Natural resources area. We do not want China to go into Africa. We don't want China to buy natural resource companies. And we also don't want China to be behaving like a traditional military power. That is, we don't want China to build a strong military. We do not want China, we want China to be successful, but we do not want China's success to inspire an alternative development model that features a combination of capitalism and autocracy. So when you put the two and two together, you see this fundamental source of conflict. That is, a China that is uncertain about its own future, uncertain about its relationship with the West, facing a West or the international community that is also uncertain about China. And you have this very negative feedback loop. But the good news is that China and the West can learn. And in the past 10 years, we do see China moving in some areas in a direction that is welcomed by the West. But in some of the most important areas, China continues to behave like a traditional great power. And that's, I think, where we're going. So the question is, as far as inflection point is concerned, will China learn fast enough to avoid increasing conflict or friction with the West, or will China move down a path that shows that China is simply no different from the traditional great powers, and that will mean more conflict and friction with the West? Thank you.
Mentioned, thank you very much for that very insightful look at the sort of tensions, geopolitical as well as economic, that we're going to see as China continues to rise. And I think your point about the West wanting China to share the burdens but not share the power is a good one. It's one I've heard a lot from Chinese policymakers, where one of the things they always remind you is that their vote in the International Monetary Fund and World Bank is equivalent, I think, to that of the Benelux countries. And so they say, well, you want us to share the burdens? But, well, from those very three rich presentations, I drew out lots of thoughts and questions, and I could sit here all evening asking them, but I'll abuse my privilege as the moderator just once to press one thing. And I think one of the underlying sort of themes here, we got it from Michael's presentation at the beginning as well, is that we shouldn't look at China as a sort of monolithic place with a great plan for the next 20, 30 years. There are lots of divisions of opinion. And the question, one of the questions I have, I suppose, is as they try to manage the day-to-day, week-to-week, month-to-month economic and political developments, to what extent do you think that people and this is a sort of question that I invite either any of you or all of you indeed to answer, to what extent do you think that people at the top do have some sort of perspective, long-term perspective that says this is where China wants to be? I mean, I often hear commentators say, well, actually, China wants to be a free rider on the system for the next 20 years, and then it has this great plan, it'll be powerful enough, and it'll sort of tear it up and impose its own. But to what extent do we think that China today is driven by the sort of short-term exigencies, And to what extent does this fit into some medium, long-term plan? And I'm going to invite any or all of you to...
I don't think there is a long-term plan. I think there is a long-term plan in the sense of there are certain vague objectives that everybody agrees on. We need to be environmentally more sound, but we won't take any of the necessary steps that'll get us there because there's a cost to it. We need to rebalance the economy, but we're not going to do the things, raise interest rates, raise the value of the currency, raise wages too quickly, because that'll undermine significantly powerful constituencies within the country, and on and on. So I think there is a vague long-term goal, but I would argue for the last several years we've almost moved from, I won't say from panic to panic, but from very short-term orientation and a refusal to take the very difficult steps. And it's not because they're not known. I think even as high as Premier Wen knows what the steps are. I think it's just very difficult given the political confusion within China for a consensus to exist before those steps are taken.
A couple observations. Is the absence of a long-term plan bad or good? And I think what China's actually learned is...
You've got to answer now.
It used to have these, it still has these 5-year plans. They're very precise, very targeted, very numerical. They no longer have this, because they've also learned from the fact that long-term plans don't make any sense. So the tricky question is, can you come up with a series of short-term adjustments which really reflect changing circumstances? They've been able to do this extraordinarily well in the past. But the question is, can they continue to do this? And the doubts creep in because the complexity of their problem has changed a lot. So the system was very good when their incomes were very low and the economy was simple. And there's a big risk now because the economy is more complicated and they're wealthier. Now, one other aspect I want to make, growth is driven by only two things. It's either, and they're both INVs, it's either investment or innovation. And growth was driven by investment, and still is. And they realize that the next generation has to be driven by innovation rather than investment. And the tricky aspect of it is their system is really not very good on the innovation front. And there's a lot of changes that have to occur for that to work. But let me just go back to my middle income trap. No country of middle income has been able to make that transition except South Korea. Now, South Korea did it 15, 20 years ago with some very extreme policies that people don't fully appreciate, actually. And China's going to probably copy that as their model. And there are all sorts of problems in that model and not fully recognized because South Korea wasn't that large. But for a country as large as China, it's a different issue.
I might add that there's a little detail missing, that South Korea made a transition to democracy 20 years ago. So it could move from a more rigid society to a more innovative society. I want to make 2 points about the ideas.
I would just want to press you as well, or just to add to my question to you, because isn't this sort of dangerous? Because we've got a status quo power in the US, which doesn't really seem to have much of a long-term view. I remember talking very long ago to someone very senior in the National Security Council, and I was saying, what's the long-term view? And he said, well, you've got to understand, for us, the long-term is this afternoon. and, you know, so we've got the status quo power, we've got the revisionist power, both with sort of potentially very tough economic but also geopolitical conflicts, as you explained. Yeah. How is this going to work out?
I would say China is revisionist, not necessarily in intent, but in effect. Yeah. What China does revise the global order. Let me just go back to the first question, that is, do the Chinese have long-term objectives, plans? They do not have a consistently clear long-term objective. But amazingly, they do know the tool to get where they want to be, even though they don't know where they will end up. The tool has been economic growth. Because you ask Chinese elites, how are you going to solve all these problems? Do you have plans? How do you do this? Economic growth will solve it. So, but they forget that economic growth is such a destabilizing, complex process. It can generate all kinds of conflicts, both internally and externally. And now externally, to answer your question, China is bumping up against some of the core interests of the existing sort of Western-led order.
Okay, well, thank you. Now, I'm going to throw the conversation open. I'm just going to say the rule from now on is if your mobile phone goes off, you pay a €50 contribution to the Pakistan Relief Fund, which the staff of Carnegie will identify you and collect. So if you all want to check, or perhaps you all want to contribute, that would be a good thing as well. So what I'll try and do is take sort of groups or 3 or 4 questions, and so we'll have a fairly free-flowing discussion, I think. So who's going to be first one?
My name is Sylvain Glasgow. I'm an emeritus professor at the University of Leuven, having taught for many years on China. Well, economic people from the academic world have a tendency of always saying, quite nuanced on the one hand, on the other hand, and the hand in the middle also, something like that, Somewhat different tonight. The 2 first speakers were really at odds with each other, and I would wholeheartedly approve what the second speaker has said. I feel myself in a position, unfortunately, where I cannot agree at all with the first speaker, almost on no account, although he has the great advantage of living in Beijing, which I don't. Let me just take 2 points. The trade surplus. Comparing that with Japan makes no sense, I think, because the exports from China are intermediated for about 50-60% by foreign multinationals. I know. Foreign means also Hong Kong and, Greater China firms. Okay, makes quite the difference. Second also, so much of the export trade is in fact, how should I say, fragmented, coming out of fragmented production in East Asia, where only, let's say, the last stage has been in fact produced in China, and this is a minor, sometimes, a minor section, a minor share of the end value of export goods. There have been very excellent articles, excellent research having been done recently, one by a former student of mine who is now in Canada. Okay, so that makes already quite a difference, yeah? I mean, quite a difference. Now, on the so-called undervaluation of the renminbi, well, I have produced a paper on that, which I will submit soon. I cannot agree at all, but that would take a little bit more time. One of the arguments I have just made already. Now, another one, and then I stop because there are more. Yeah. Financial repression. Financial repression. 10 years ago, it was believed that China's financial system would really explode. And that would also mean the end of China's economy. It has not happened. They have been able to really, to quite an extent, to rationalize their financial system, including their major banks. It's not perfect, far from that, but you cannot expect them that they would move to, let's say, a completely Western system in the financial field. And I stop with that, China has been very happy that their financial system was not yet sufficiently sophisticated 2-3 years ago, so that their financial behemoths, I mean the big banks, were not seduced into buying and distributing so-called highly sophisticated products, which meant the disaster for the Western financial world.
I am the Austrian permanent representative to the European Union, and I served in China previously. So I would like to briefly comment on the first speaker. Maybe I would agree that the similarities between Japan and China are a bit overstated, but I would like to comment on one point, namely the internal contradictions. I remember when I was in China and had a conversation with the governor of the Bank of China, and he said, well, if I were to explain China's problems in a nutshell, and that was 6-7 years ago, he would say, it's all about how to deal with employment. We need to create 20 to 25 million jobs a year. 1/3 comes out of demography, 1/3 comes from the restructuring of state industry, and 1/3 is from migrant labor. And for this, we need roughly 8% plus growth. So I think we are still, to a certain extent, to this point, and this makes it so vastly difficult, to talk about rebalancing the economy. And this brings me to my second point. Mr. Hang was right when, and I think I agree with his approach, that yes, we should talk maybe about China as a responsible stakeholder and sort of trying to find out where we share interests with China. We have been trying to do that, and there is not really that much of a contradiction saying that on the one hand you have a strategic partnership and on the other hand you talk about China as a responsible stakeholder. But it brings me a bit to the point Professor Pei made. Where is the inflection point? Are we already there where our appeal to China to become or act as a responsible stakeholder would bear the fruits we are looking for? And there is one word which has been so far a bit absent in the discussion. Wouldn't it make more sense also to introduce a notion of reciprocity? Mr. Hang, you were saying that China was Europe's largest trading partner. Unfortunately, it's the other way around. Europe is China's largest trading partners. The European Union exports more to Switzerland than to China, unfortunately. Thank you.
Jamie Shea, NATO. I'd like to ask a foreign policy question, if I could. Obviously, the US is a superpower, first by dint of its economic and military might, but also, of course, because it has a sort of permanent system of alliances and partnerships which don't really change very much. Not just, of course, with Europe, but with certain other countries, Japan and so on as well, which give it this sort of diplomatic outreach. To what extent, as China grows, is it adopting a sort of go-it-alone policy, a tactical policy, in terms of pursuing its interests, or to what degree is it now sort of seeking out more permanent partners, if not alliances, countries it considers like-minded countries, with which it would coalesce to push its foreign policy objectives? I mean, from time to time we read about rapprochement, for example, with Russia. There's the Shanghai Cooperation Organization, a regional type of framework. So I really be very interested if the panelists could say a little bit more about how China sees its foreign policy priorities beyond the economic resourcing of its industries, and where it sees its partnerships in the 21st century. Thank you very much.
Okay, well, I'm going to go back to the panel on those three. I think Michael deserves an opportunity to defend his position, but and I'm going to ask Michin and Yukon to sort of choose what they would like. But just to recap, we've got the challenge to Michael's position, this question also of reciprocity. Should we be seeking reciprocity from Europe? And I think thirdly, if I'm not sort of simplifying it too much, the geopolitical strategy that China's pursuing. But I'll give Michael first.
The issue of the imbalances, especially the trade imbalances, I often hear people say that it is very different because a significant portion of the exporters are foreign-owned or with foreign relationships. And I never know how to answer that question because I honestly don't understand why it makes a difference. From an employment point of view, from a revenue point of view, from a whole series of points of view, it doesn't affect at all the imbalance between domestic production and domestic consumption. Let's make a thought experiment. Let's assume that tomorrow China decided to purchase all of the export facilities that were foreign-owned. If it did that, has anything dramatically changed? Would the trade balance change? Would the employment impact change? Would any of these issues change? I don't really see how they would change. So the foreign ownership of a substantial portion of the export sector, to me, is pretty much an irrelevant issue when we're talking about the imbalances. On the issue of financial repression, I'm not sure. Financial repression has to do with interest rates. It doesn't have to do with the lack of sophisticated products in the banking system. And if by sophisticated products what you mean are very risky, loss-making products that have been moved off the balance sheet, I would say that the Chinese have not been immune to that at all. In fact, the Chinese regulators are extremely worried about that. Victor Scher, a professor at Northwestern University, did a wonderful study, and a number of other people have done studies, most interestingly the rating agency Fitch, that suggests there is a huge amount of toxic debt within the Chinese banking system. It's simply not recognized. So yes, officially there isn't that much garbage in there, but nobody, including most Chinese bankers that I know, would deny that there's an awful lot of stuff in there that is hidden, that is not recorded on the balance sheet. But the issue of financial repression, where it is relevant to me, is that in a financially repressed system, when the cost of capital is very low, and in China, the real cost of capital has been negative in the last 5 or 6 years, almost as often as it has been positive, which is certainly one definition of very low. The risk is that you get a significant increase in non-viable investment, misallocated capital. And it is true that 10 years ago, there was a huge problem in the banking system, an enormous problem in the banking system. Private sector estimates, which the government doesn't dispute, is that as much as 20 to 40% of the loans in the banking system were non-performing. And yet nothing happened. The whole thing should have collapsed, right? If you had such a terrible banking system, then the banking system should have collapsed, and it didn't. So it's fine, it's not a problem. Wrong, it is a huge problem. In a banking system that's guaranteed by the state, and the banking system essentially is, it doesn't collapse. What happens is that you clean up the banks. And how do you clean up the banks? There are basically 3 mechanisms for cleaning up the banks. One is you give them gifts of capital, which the PBOC did. It bought loans at way above their market value, and it capitalized them. 2 is you give relief to the borrowers to slow down the accumulation of non-performing loans, which it did. When interest rates are extremely low, there is implicit debt forgiveness there. 3 is you create interest rate games. In the United States, the way they do it, and the way they will do it now and in Europe to clean up 2 disastrous banking systems, is they'll keep the yield curve very, very steep, because banks borrow short and lend long. And central banks do that very specifically to increase the profitability of the banking sector. In China, they have a more direct method of doing it. They don't have to play yield curve games, although they do play yield curve games. But more importantly, they simply set the maximum deposit rate and the minimum lending rate, which is extremely high. Why do they do that? The PBOC was explicit, to clean up the banks. So they clean up the banks, no problem. Huge problem. Because whenever you don't, if there is a cost, if there is a subsidy, if there is a cleanup of the banking system, somebody paid to clean it up. And until you figure out who paid to clean it up, you haven't completed the analysis. It was cleaned up as all banking sectors are cleaned up. It was cleaned up by the banking sector, by the household sector. And make no mistake, European households are going to clean up the European banking system. American households are going to clean up the American banking system. Chinese households cleaned up the Chinese banking system. How do they clean it up? In the form of extremely low deposit rates. My calculation is that somewhere between 5 and 10% of GDP was transferred every single year in the past decade to help clean up the banking system. Now, so doesn't matter, right? It matters tremendously. Remember, 10 years ago, household consumption, which is constrained by household income, not by the mythical desire of the Chinese to save, household consumption was 45% of GDP, an extremely low number which the Chinese were determined to raise. 5 years ago, it was 40%. There was complete policy consensus that household consumption has to go up. Last year, it was 35.6% officially. Some new numbers suggest it may have even been lower. Why do I connect the two? Because if the household sector is forced to clean up the banking system, then that's going to be a significant constraint on the growth of household income. And during that period, not coincidentally, the share of household income as GDP collapsed, in line with the share of household consumption. Again, not coincident. If they have money, they'll spend it. If they don't have money, they won't spend it. So what I would argue is that the collapse of the banking system wasn't in the cards and won't be in the cards. There is a huge problem with rising non-performing loans in China. We all know there is. But unlike someone like Jim Chanos, I don't believe the banking system will collapse. What will happen, the household sector will be forced once again to clean it up. And as they do, there will be more downward pressure on household income and on household consumption, which is why I believe that, we're all hoping that the Chinese consumer rides out on a white horse and saves the world. It ain't going to happen. We expected that 5 years ago. Their share of GDP contracted. And I don't know if it'll keep contracting because these numbers are impossibly low, but it's not going up. It's not going up anywhere near the amount that it's going to have to because they're going to clean up the banking system one more time.
East Asia is unique in the size of its trade and parts and component among themselves. Trade and parts and component is higher in terms of percentage of trade in East Asia, even compared with the EU. You would think the EU neighbors would trade more, but they don't actually. East Asia is the only region in the world where it has this phenomenon of parts and components trade. And now, in one of my FT articles, I actually try to show why this actually explains why China is such a competitive force economically and why East Asia as a region is so competitive. Because this parts and components splitting up, facilitated by dramatic declines in transport costs, allowed all East Asian countries to gain economies of scale and specialization of a degree not seen in any other region. Now, this all occurred over a 10-year period. And this issue about exchange rates and everything else is complicated by the fact exchange rate issue is not a China issue, it's a regional issue. And it's this parts and components issue. Now, the other point I want to make is it is also incredible how rapidly the adjustment can occur. 3 years ago, China's current account surplus was 11% of GDP, the highest in the world by an enormous amount. This year is going to be below 5. Now, a country whose current account surplus can go like that and come down in 2 or 3 years also reflects an economy which is quite different. It's not following the normal rules. So adjustment is actually not managed the same way. Now, one other point I want to mention is about the employment growth rate. China, 5 years ago, said 8% minimum generate jobs. 10% even better, or else I won't have enough slack. The key problem in China today is there's something wrong here. Why is it a country growing at 8% or 6% can't produce enough jobs for its people? That would be an incredible rate, right? And the answer is, it couldn't before, but it can now. It couldn't before because they had too many people in the rural areas and because the state enterprises were too bloated. So Chinese leaders haven't actually recognized it doesn't need 10% growth to do well. It may not even need 8. It could actually get by with 7 or 6. And if it understood the 7 to 6 could generate its growth labor goals, it would also realize that these issues of sustainability, inequality, financial impression, consumption, all can be managed. And I think this is a dramatic shift in China's perception that's under debate. So let me just stop there.
Well, to respond to your question, officially China has a so-called independent foreign policy, which eschews alliances and so forth. But when you look at China's overall foreign policy, it is actually very sophisticated. Regionally, it has a very realpolitik approach that identifies key countries that are vital to China's security, with whom China has a de facto alliance relationship. Pakistan, the most important. Burma, North Korea, not exactly the roster of, what should I say, model countries. And beyond Asia, China's concern is much less with security than with economic relationships. So business trumps everything. But in this area, China has a huge disadvantage vis-a-vis the US. China is surrounded by hostile neighbors. India, Russia is not exactly a friendly country. Japan, obviously, and even Vietnam. So in dealing with China, the US has tremendous leverage. Recently, we've seen the South China Sea dispute, and that's actually a case where you see the US, how the US can use its traditional alliance structure and take advantage of China's natural disadvantages in not containing China, but to make China understand the strategic reality.
And we are ambivalent as well. I remember being at a seminar in Beijing where there were people from the foreign department of the Communist Party, and I was pressing the case for China to take a more internationalist view and about, Sudan, and take a sort of longer-term view of its relationship with Iran and whatever. And in the break, someone quite senior sort of pulled me to one side and said, "So you think we should be more interventionist in our foreign policy, do you?" And I said, "Well, yeah." And he said, "Well, go and visit our neighbours and ask them if they think we should be more interventionist in our foreign policy." And there is that, as you said earlier, that ambivalence. But let's have another round of questions.
Peter Spiegel, I'm the new bureau chief here for the Financial Times. Get the bias from the moderator. I'd like to just see if we can continue the discussion about this magic 8% growth figure that the Austrian ambassador first brought up and then Yukon also mentioned. And get at the issue of, that I think you also were touching on when you talked about the South Korean model, which is the potential for domestic support or lack thereof of the current system. I was on an extended reporting trip in Beijing about 18 months ago, and that was all discussion was about, that the magic 8% had been breached, that you had huge dislocation of workers in the export-oriented regions in the South. I think the official numbers were somewhere in the neighborhood of 20 to 25 million displaced workers that were coming from the villages to the South and not having jobs. And yet, here we are 18 months, 2 years later, and there hasn't been, at least as far as we can tell, huge amount of domestic destabilization because of it. Is that because it's underreported? Is that because the state has been better at dealing with that? Or are we not yet at a point where that, or is it the 8% not necessary, as you perhaps touched on? Is there anything we can learn from the recent crisis that can tell us how the Chinese government may be able to deal with domestic unrest as they deal with these struggles in the coming months?
Okay.
Wang Yui from Fudan University. My general impression of this debate is very connected with my experience in Brussels, that we discover China is like people, like scientists discover whether there's life in the Mars, and then you discovered whether there's oxygen or water in Mars. Otherwise, there's no life. Probably there's some life without water and oxygen, still, called life. It's not the different life on the Earth. What I'm saying that you raise many questions about China according to your standard or expectations. Whether China can sustainable without democracy, whether China going along without American airline system, whether China can surpass this pitfall of the Midcon, like South Korea. So you have many models compared with China. Of course, that's because, to be frankly, as a scholar, I have to remind all your knowledge, or your especially your westernized knowledge, is too limited to understand China, because as an Asian civilization rising, it's not just a country rising. For example, in the Asian, Egypt, India, and Babylon, they all either colonized or even strong connected with the European civilizations. But China is quite dependent, whether diplomacy or civilizations. This makes you more difficult to understand China. The only method you understand about China is comparison, whether you have your experience, whether today's China is like the 1920s American, whatever. This is your background, your knowledge, your. To be frankly, as a Chinese, I think sometimes some questions are very funny for me to my understanding. Sorry to say that, because for example, to your question, we don't have so many airlines in the United States, but why do we need these airlines? Airlines is zero-sum game. You make one enemy, one friend, at the same time we make another enemy, right? To be frankly, there's some strategic partnership. We have at least 60 so-called strategic partnership with so important countries, including the European Union. Recently, we update our strategic relations with South Africa and Ukraine, right? And even some small countries in Africa waiting to build a strategic relations with China. China say, wait, maybe we should think about the details. So this is maybe a new alliance, new relations of mentality with that. And you said that China is a traditional power. What's the meaning of traditional great power? It's a European traditional great power. There are many traditional European the great power in Asia, in Latin America, in the world, but it's not in your eyes, because your knowledge based on the Western or Americans in the background. So I'm sorry to say that. So that's I'm saying that. I'm not going to the details, but this is a very strong feeling of my experience. Stay not only here, but also everywhere in Brussels. Thank you.
You mustn't, of course, be sorry for saying any of these things, but because this is no, you mustn't be sorry. You must not be sorry. But can I just ask you, are you saying that we are not, as you Westerners, whatever, we're not inquisitive enough about China, and that we try to impose these models? Because one of the things that I discovered talking to Chinese people is how closely they have studied the experience of the West. So I meet Chinese scholars and indeed policymakers who have studied the rise of Germany in the 19th century and the effect that had on great power politics in huge detail and know much more about it than most Europeans do. So why are Chinese scholars studying some of these things?
To be frankly, even for the Chinese scholar, the China is a miss, too difficult to understand. There are too many Chinas. Sorry to say that. But to be frank, the most important conclusion I want to share with you is the rise of China is the result, is the natural result of the Chinese to cooperate, to deal with all kinds of challenges and difficulties, including economy, foreign affairs. You say we are surrounded by unfriendly countries. U.S. is very lucky because you are successor of the Western hegemony. Why you have so many airlines? Because most countries, they are considered by the West model as the so-called modern. They want to pursue, want to succeed in your past. But China still, wake up after more than one century. So this makes China more difficult. And even mid-com, all these kinds of I personally think that the economy is too rational to understand the Chinese the situation, and the political science also rational choice, whatever. This, there's no one approach to open all the doors of Chinese difficulties. If you ask how can I understand China, I don't know even. So this is most of the difficulties.
Okay, thank you. We've got the point that my colleague raised about 8% growth and employment, and then this challenge to the way that we frame our thinking about China. So. Minchin, let me start with you.
I hope China remains a mystery, so my job security is permanent. Unfortunately, I think we are making progress in unraveling the mystery. In China, you hear two constant refrains in public discussion on China and China's relationship with the West. One is that China is exceptional, that China's experience differs dramatically from that of the West. To some extent, that's true. But you can also use the Western experience and explain China's experience in a very reasonably persuasive way. We're not going to do that today. The other is China is against universalism, especially the idea of universal values, such as human rights and democracy. And I see this as more or less as a self-serving rhetoric of the current ruling elites, because they do this. That's because I said that the current ruling elites know that their economic interests lie with the West, but their political conflict also is with the West. And this complexity boils down to this talk of universalism as being not applicable to China.
I'd just like to make one comment. It relates to the labor surplus, but it relates to some other points that were made. When I wrote my thesis at Princeton, my thesis supervisor was Arthur Lewis, who won the Nobel Prize for Economics. And he won the Nobel Prize for Economics in development for basically 2 points. His first point was that for a country to grow really rapidly, developing countries, you maximize investment and you actually take away savings from households. And you do it as long as you can do this. And if you do this, you grow very quickly. That's essentially what China's doing. The second point of his thesis was when does it change? When does this model change? And the model changes when you run out of surplus labor. Now, the big debate right now in China is China running out of surplus labor or not? Now, those who think China have a lot of surplus labor say, well, 50% of the population is still in the rural areas. So it must have 400 million people who are still underemployed. And first of all, I don't think that's true, actually. And the reason why I don't think it's true is because wages are rising very rapidly in rural areas, too. Surplus labor means that people get employed for no increase. And wages are increasing by double digits. So the first point I would make is China has reached this point where what I call pure surplus labor has disappeared. Okay? And then it goes back to the 8%. If that's the case, that pure surplus labor has disappeared, China does not need to grow 10% or 8% to have full employment or reasonably rising wage increases. And I think that's an issue that China needs to really think about very carefully and ask what it means. Let me just stop there.
Why 8%? It's sort of a mystery number. And I've never found a really good explanation for 8%, except that I've often been told, and it's one of these things that I've never seen any citation, but I've often been told that it was Deng Xiaoping's number. And so it's achieved a certain status, 8%. But there's nothing magical about 8%. In fact, a very, very smart man, with whom I often disagree, but a very smart man, who's another writer for the Financial Times, occasionally, Arthur Kreber in China, has argued, I think correctly, that China could grow at 3 to 4% a year and absorb all of the new labor coming in. But it requires a different growth model. It requires a model that's much more labor intensive. If you ask most people what is China's comparative advantage, most people, I think, would say cheap, disciplined labor. That's not true. If that were the case, Chinese growth would be very labor intensive. Chinese growth is incredibly capital intensive. Even by Western standards in some cases, it's very capital intensive. And I would argue, because yes, labor is cheap, but capital is almost free. So we come back down to the same problem. And the same problem is that we need a change in the development model. We need a change in the growth model. And China will get there. And perhaps this issue that this model is very successful until you run out of surplus labor, or I would add, until your trade surplus becomes very difficult for the rest of the world to absorb, is true. But the countries that have made the adjustment, and many have, there's a long history of countries going from export orientation towards domestic market orientation. But here's the sad thing. I have not found a single case of a country doing it easily or quickly. It's always a very difficult process. And that doesn't mean that China will fail at the process. It just means that if we think it's going to be easy, then we're basically betting against historical precedents, because the precedents aren't good.
4 minutes ago, I was told we had 10 minutes. So what does that mean? It means we've got about 8 or 9 minutes left, I think. The lady here.
Yeah, my name is Adeline Hinder. I work for the European Commission on trade with China. I wanted to come back to the question of innovation. You have mentioned that China is striving to become a knowledge-based, innovative society, that it's not there yet. We certainly have some issues with the way they are trying to get there. When you think about forced technology transfer, you think about the problems on intellectual property rights. But yet, when you think about the reserves that they have, when you see some of the successes on electric cars, on satellites, I think they've done better than we would have expected, maybe. So I would really be interested in your view on whether China can get there, how quickly, and really what are the prospects in terms of creating an innovative society in China.
Omar Ahmed from public affairs firm Hume Brophy. I'd just like to touch on two issues that Mr. Pai and Mr. Huang have spoken about, and that's the zero-sum political game and the middle-income trap. And it's just one question. If Chinese leaders view the world as a zero-sum political game, if they are to escape the middle-income trap, who are going to be the losers?
Okay, so got 2 good questions to finish off, and then I think each of the speakers has sort of 2 minutes to sort of say what they take from this and to change their minds if they want to, or reassert their positions. We'll go in reverse order this time, so Mitch.
Me?
Yeah.
Okay. Difficult question about who are the losers, but I think one of the losers, as I see it, as an inevitable loser, is the Communist Party, because you look at what it requires to change their mindset and then get out of the middle-income trap. You need a much more open political system. You need a new set of ideas that will legitimize the current holders of political power, and then also build the underlying trust between the West and China. And let's be just very frank about this. The West and the Chinese Communist Party cannot trust each other because of very fundamental differences in their political values and the way power is legitimized in their systems.
This middle-income trap, let me take a really crazy way of looking at this question. If you go back 100 years, 150 years, Asia accounted for 40% of the world's GDP, 40%. India accounted for 15%. 55% of the global production was accounted for by Asia. By 1950, this 55-60% had fallen to less than 15. So they go from 65% to 15. Now, what's happened since 1950 is that Asia-India's share has gone from this 15% back up to about 30-35. And we've projected over the next 10 or 20, 30 years at the growth rates, you'll see that Asia's share will now come back up to about 50 under reasonable hypothesis. Now, who loses under that? Well, in some sense, if the world is growing rapidly, no one loses in an absolute sense. But in terms of shares and power structures, everybody else loses. Now, if you take away Latin America's growth is actually above normal. So Latin America is not going to lose. So you're left with Europe, Eastern Europe, and North America. Now, I'm talking about politics. I'm not talking about standards of living declining. But that's what the tension is all about. So if you look at it as the inevitable rebound from a long-term perspective, that's what you have in store. How do you deal with this? Now, innovation, let me just make one observation. We do not know the elements of what makes a country truly innovative. We can tick down lots of things. Universities are there, open societies, intellectual property rights, lots of scientists training, boom, boom, boom. We've seen lots of countries with all these elements who don't innovate at all. We've seen other countries with just a few who innovate greatly. Now, China's got, I think, tremendous advantages in terms of size and willing to put finances because innovation is extraordinarily costly. The success rate is only 4 or 5% in terms of real innovation. So you have to put a lot of money into this and hope you get some real big winners. If you're small, you have a tough time. And China has the benefit of size in terms of skills and people, sheer numbers. But China has a society where information sharing is limited, openness to the external world is a problem, the internet is a constraint, its education system is confining. So you got these tremendous advantages and tremendous disadvantages, and the answer is, will China innovate? And if you look at the literature on China, they find the same kind of paradox. They're extraordinarily well in a few things, but extraordinarily poorly in some other things. And whether this will end up being very good or bad, I don't know the answer to that question.
I think I would agree with you, Colin, on the issue of innovation. I think there's potential. I think there needs to be pretty deep changes. I've taught at Tsinghua and Peking University that are often considered among the top 2 schools in China. And the kids are probably the smartest in any university in the world if you could measure average intelligence. But I really despair about the quality of the education for very bright kids. It is just not oriented towards innovation. Now, that's not a permanent problem. Hopefully that'll change. But I think it's going to require some significant changes, including a more open society, before China occupies the space that it should as an innovation powerhouse. It'll take a bit of time. As for the other question, perhaps the Chinese do see it as a zero-sum game, but that doesn't mean that that's right. I don't really see it as a zero-sum game. I think it's perfectly possible for China to grow quite rapidly over the next 20 to 30 years. I believe China will grow faster than the rest of the world for the next 20 to 30 years. I think the competition investment banks have to see who can predict the earliest possible date for when China becomes the largest economy in the world is one of the silliest competitions in the world. Honestly, I don't think it will become the largest economy in the world. I'm very skeptical about some of those claims, in part because we saw how stupid those claims were just 20 years ago when we were talking about the other great follower of that model. What we do know is that we have no idea what the world's going to look like in 30 years, but I suspect we should look more at demographic issues if we're thinking about who is going to be relatively more important and relatively less important. That's probably the safest kind of predictions we can make, and everything else is probably not worth predicting.
Thank you, Michael, and thank you to all our speakers. It's been an inordinately rich discussion. I think we've all learned something. 2 things, I think, well, lots of things stand out for me, but 2 in particular as to power, I think, lies in the eye of the beholder quite a lot of the time. And in China, things don't look quite as strong as they look from the outside. A second is that this is a country that hasn't made up its mind yet. It has some goals. It wants to be a great power. It sees it has, as we heard, it It understands the means, but it doesn't quite know what the ends are. But lots of other things as well. I think there's going to be a drink afterwards, but Fabrice, I'm sure, will tell us. But I would just like to invite you to show our appreciation to an excellent panel.